Hi guys, in this video I'm going to talk about analyzing the financial performance of business, part of GCSE Business AQA. So what's the purpose of financial statements? Financial statements are is a very important tool for all businesses. It allows shareholders, investors and managers to make decisions about the future and understand what the business's performance is, and the business can move in different directions to improve their finances. Producing financial statements can also be a legal requirement, and failure to have these documents can cause a business to pay fines. And there are two main financial statements, which are income statement and the statement of financial position. These two statements give a range of understanding of the financial position of a business. What's the advantages of having financial statements? It allows a business to have a clear financial overview. It allows a business to have comparisons with other businesses, and it allows a business to spot trends. However, the disadvantages of financial statements is that it will be difficult to hide financial information from investors and competitors, and it can be time-consuming to prepare. Now, an income statement. So an income statement is a statement which is a financial document that demonstrates the financial performance of a business based on its income over a 12-month period. It allows shareholders and owners to monitor the performance of a business and to see whether they are meeting their aims and objectives. And the income statement will show the revenue, the cost of sales, the expenses, the gross profit, and the net profit of a business. So here are the key terms of an income statement. Revenue, that's the money that's received from the sale of goods and services. The cost of sales is the variable cost incurred because of making a product or a service, such as the raw materials. Expense, so business costs such as wages, bills, salaries, and marketing. The gross profit, that is the revenue minus the cost of goods sold. And the net profit, which is the overall financial performance of a business in a time period, and it is calculated by gross profit minus the total expenses. The statement of financial position, also known as the balance sheet. This considers key financial information that allows a business to monitor where the money has come from and where money is being spent and the overall value of the business. So the key terms in a statement of financial position is assets. Now these are things that a business owns. Current assets are short-term that will be owned for less than a year, such as stock and cash. And a non-current asset is long-term and they'll be in the business for more than a year, such as equipment. Now, liabilities, this is things that a business owes. So current liabilities are debts that a business will have to pay back within a year, such as overdraft. And non-current liabilities is money that needs to be paid back in more than a year, such as mortgage. Now, the key terms of a statement of financial position is also net current assets. So this is the money available to the business for the day-to-day running and operation of a business, such as wages. It is calculated by current liabilities minus current assets. Net assets, this is what the business is worth, and it can be calculated by fixed assets plus net current assets, or total assets minus total liabilities. Now, capital employed, this is calculated by the equity plus the reserves. Now, this figure should always match the net assets figure. Comparing data against previous years. So both income statements and a balance sheet can be compared for a number of years. It allows a business to see how they are performed compared to the previous years. And it allows them to measure key elements such as the revenue that they made each year, their assets, their liabilities, their expenses, their gross profit, and their net profit. Comparing data with competitors. So income statements and balance sheets can be compared with competitors. It will help them see how their competitors are performing and use that to judge what their own success is. Now, the performance from the perspective of stakeholders. Shareholders, employees, and suppliers will take interest into the performance of a business. Shareholders are interested into how much profit is made, and they have the expectation that the business performance is going to improve each year. Suppliers are interested in financial performance, so they know that the company will pay them on time, and they can also use it to increase their prices if they think the company is doing well. Employees would want the business to give them higher pay if the company is doing better, and if the company is making the loss, then the employees might be worried about their jobs. Now, gross profit margin. Gross profit margin is gross profit divided by revenue times by 100. This ratio looks at the gross profit as a percentage of the sales turnover. It shows for every £1 that is made in sales, how much of it actually goes to gross profit, how much of it is left after the cost of the goods sold has been taken away. For example, if the gross profit is 77%, that means for every £1 of sales that is made, 77p is gross profit. Now, if the gross profit of the business is low, then a business may need to reduce the cost of their purchases, look for a cheaper supplier, increase sales without increasing the cost of goods sold. The net profit margin. That's calculated as net profit divided by sales revenue times by 100. So this ratio looks at net profit as a percentage of sales turnover. It shows for every £1 of sales made, how much of it is left as net profit after all the expenses have been taken away. So for example, a net profit of 42% means that for every £1 made in sales, 42p of it is left as net profit. Now, if their net profit does drop, then a firm will have to reduce their expenses, cut the staff cost, or move to a cheaper location. Hopefully this video helped you understand how to analyze financial performance. If you like this video, then give it a like and subscribe to my channel. You can find updates on videos and resources on my Instagram. You can have short business revision clips on my TikTok, and you can also find this PowerPoint on my test shop.